Alright, everyone. Oh,
Battery 30%. Connected to DLUE and Joe's iPad.
completely messed up my microphone. Hang on. Whoops. Mm, hmm. Doesn't give me quite the option yet. Hang on, guys. Hello, hello. Hello? Alright, perfect. I think this is coming up from the microphone here. So, I just want to welcome everyone back from another restful weekend. Hopefully, you did something that was outside the charts and not sitting down at your desk looking at other opportunities or back testing. You gotta go and live your life, man. It's not every day you're gonna be up here in the charts. Um, it's bad for your back, bad for your mental health. Believe me, I used to work from home, so after a while it does get to you. But I digress. We'll be looking at the markets today, see what it's been trying to do to this couple of moments. Um, so something I want to keep doing is regaining my confidence in trusting the OTEs. I know OTEs work, so I believe that that's true. But anchoring where OTs are set to function, that's the tricky part, right? I know what it is. I know, I believe that it's true. But when do you use it? Let's see here. Oh, come on. Hang on, guys. I'm just logging into something. Okay, cool. So we're seeing this massive sell-off occurring on US 100. And again, I'm using US 100 as my real-time data here to replace the NQ futures contract because the NQ, there's a delay, 10 minutes. As you pay TradingView, they're not going to give you that data. So what I'm doing is tracking the US 100 CFD contract, which does give me real-time data. One thing to take a note of is the following. So let's see here. We had this structure in place, right? Where we had continuous interruptions. Thanks, guys. Anyways, we had this, what do you call it, failure swing occur from this high to this low. So I just wanted to trust my anchoring points between the A to B leg and trust that the retracement up here to OTE would be a nice reaction to take us down lower. How low? From London lows, based on 12 a.m. sell-side liquidity, and now the way it's reacting, we might even get down to pre-Asian lows from this Sunday. Okay, so there's lots of sell side, lots of liquidity that the market can use to run towards too, and that all depends if we react in a way where we are creating an S&T divergence based on the AM highs from Friday. See that here. Now, one thing I would like to point out is that MAQ, it was kind of challenging to get a grasp on just what in the world was happening this morning because I wasn't getting a good SMT read on ES and NQ, right? So I thought, man, here we have a high, lower high. I think here we have a Yeah, higher high. So there's SMT divergence. Well, I don't want to refer to this because I want to use the breaker. We have a failure swing here compared to relative to this high to this lower high. So this is a failure swing to me. So I said, what other ways can I use this? I know. Let's take a look at CFDs. So we had a high, lower high on futures. We go to CFDs, the same contract, giving high, higher high. And it happened by like point ticks. I was like, okay, cool. So let's use that to anchor our fibs from this low to this high, get a higher time frame perspective, right? And then see if we can get down to 25%, which is this black box down here. See if we can get down close below it, and then get into a retracement, and then sell that guy. Okay. Ideally, we'd like to get it down to these lows, but depending on how we behave on these lows as well, it could also mean that we're going to continue that bullish trend. So because we just crossed 12 a.m. sell side liquidity from this morning, let me check and see how we reacted here. See that? High to low. But here we have a low, higher low. This is looking good. So let me put OT here. Sorry, not OTE, quadrants. Make it white. Let's see how we'll behave here. Curious. Oh gosh, all this, and I didn't even check if I'm live. Okay. Yes. Okay, so it looks like I am live. So to me, the way I've been interpreting price is once we create that S&T divergence, we've turned a buy-side delivery function into a sell-side delivery function. And we're only going to get sell-side delivery until we get another S&T divergence. If we don't get S&T divergence, you can anticipate to hold down to these lower lows, right? From the A anchor to that B anchor. Remember, we're taking a look at that slingshot effect. So we're anchoring our A stop, anchoring, and as it's going up, we're like stretching that rubber band from the slingshot. Boom, you see S&T diverges? That's where we anchor it. The moment we close below 25%, that's when I'm interested into getting into that sell. As well as when you have, I guess, ideas of where the market might go towards, you can start doing your implied dealing range as well. Start getting a premium raise so that you can hit the target. Right now, we can set our targets down to this low. So anything above equilibrium, you can start to sell. And this too, right? Even though we had S&T, I'm not gonna go ahead and immediately start thinking we're on a buy-side delivery program. No, because it still needs to close above 25%. So this anchor, this low, from 12 a.m. to this lower low, right? Create a breaker. Here we did it. So we're having like a creation of a failure swing. I want to get on the breaker one. Okay, so let's take a look at our white range. Does it close above 25%? Not yet. Not yet. So in the meantime, while it's not doing that, it can still retrace above and then just continue to sell more, reaching down to lower sell side liquidity pools. And eventually, maybe even exiting out of this external range from this low to this high, making this a market maker sell model. And the SMT, that SMT reverse, SMT, smart money reversal is one of the hardest entries to acquire because that's essentially turtle soup. But which liquidity pools will you trust? Well, in my back testing, I think I figured out my method on figuring out which turtle soup I can trust. And it all comes down to what's been balanced and what's not been balanced. If we do a higher time frame analysis real quick, apologies for all the markings. Okay, let's go right here. Let's get rid of you. If we have this market analysis and we see that there's balance, for example, from this high, how can I show this to you? If we have something like this, where's my drawing? Okay, what do we have? What do we call this? Is this a, I would call this a failure swing low. So price didn't retraced, creating this low, but it didn't went down to external range low. So the way I interpret this is that from this high to this low, from this low onward, this area here has been balanced, right? And if there's a liquidity pool or a sell side liquidity pool that's just below it, for example here, I anticipate price to dip back down to that level and then treat that as my turtle soup. Now, because I want to play it safe, I do get myself on a stop entry, meaning that when price dips back down, I don't get triggered until it goes back up, treating this as turtle soup. And continuing the price delivery continuum theory. I've also been looking at the dollar as well over the weekend, and it's not looking good. Not looking good, guys, in terms of seeing the dollar rally up further. I don't see it. I mean, I even have my markets here set up too. As you can see, um, dollar had a just like a. I placed this on Friday, right? I mean, of course, no money was extracted from the markets, but I kind of just placed it and see how would we be reacting when I come back here Monday morning, and well, this would have been a stop entry on the equilibrium side of things, and I do anticipate it going down to here to 97.714, possibly even further down to 97.408. This is my little projection. So why is the dollar going down? I anticipate interest rates dropping further. Interest rates drop further, gonna make bonds go up higher. If the dollar drops, what's gonna cause the market to do? Right, we're gonna have a risk-on scenario where market should be having an easy time going up to make higher highs, right? But because we're in this precondition, we first need to gather up more sell stops, right, before we start seeing heavy price action onwards. I think if we don't close this beyond 25 and we keep going lower, we're gonna have a co-joint market where dollars dropping as well as the stocks, and then a lot of people are gonna be saying, "Oh, smart money doesn't work. This guy is a scam." The Michael guy. Um, we should be having a risk-on scenario, but it's just a matter of looking over what features are doing as well and CFDs, and that's kind of how I'm getting my read. Okay. We also don't have that much of a news. Let me show you guys. So this is the OT entry I was telling you guys about. I anchored my high to low entry down here, 5 handles, aiming for London lows. Did we hit that? London lows right here. Yeah, we hit that. That was like a 5 handle risk to make 13 handles. Not bad. No, 17 handles, my fault. That's a 3 RR trade. A 5 handle stop loss like that. I could have probably done like a 1 contract I think Q. Um, but 13 handles, whoa, and even further. It's crazy. Now that I think about it, yeah, I actually could have been working too. 5 handle stop loss on NQ, one contract, sell. That's nuts. So that would have been 24, 30, 40 handles, 50 handles. Holy smokes, 50 handles. 50 handles. Wow. I think a tick is $12.50. That would have been good. Okay. So how are we reacting off that low here? I still would like to see price close above 25% here. Excuse me. A big challenge for me was always trying to look for where was the liquidity that we have to refer back to for SMT. Because before I had, I guess, put this theory into practice, I was always referring to old lows, like here, old low, old low, old low, old low. Like, what's to stop the market from reusing these lows? And then they came the concept of opening ranges, and how price refers that throughout the day to create its power 3. And that kind of got me thinking too about the lessons that we were taught in 2023 and 2024, and how there's more than just one opening range, right? Opening range was initially taught from 9:30 to 10, but then we started getting hints of other opening ranges. I'm talking 1:30 to 2 and midnight to 12:30. So I kind of put my brain cells together and started to theorize. Well, if this was if this is how he's using opening ranges, what other opening ranges can exist, right? So I started thinking about the opening ranges that occur for every session. So there's the Asian session, London session, pre-market session, you know, and lunch session too. And what possible opening ranges can exist around that time? So as I've been plotting my liquidity pools based on previous sessions and what has been left over, I'm using those levels to key off of to see if there's going to be a divergence in S&T. Hey guys, so even though I would like to see a close above 25%, it doesn't mean that we can just continue to retrace and continue lower even if we don't touch that 25%. This slingshot is, how can I say, it's flexible. When it closes above 25, then yes, we've completely anchored this low. If it hasn't, anticipate this low to continue expanding lower, 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 lower. And then what do you think we'll get? This high to this low to this high, from this high to this low. What do you think we'll get? A balanced price range. Why? It was an area that was met with buy side delivery, later met with sell side delivery, in the form of a market maker sell model. And again, everything I'm saying here is all just interpreted information based on concepts that were authored by Michael Huddleston, I think. So, I mean, of course, all credit goes to him. and I'm just a student of his who's been learning for months. And it's just, so I don't want you to see me as like someone who's all knowing as well, or like someone who's like in the know, because I really don't know. I'm just someone who's putting the information plots together and trying to come up with a way that I can, make my own bread in these markets. But yeah, when you join this live stream, just see me as like a classmate who's next door and someone who's willing to open up their notebook and show you what's been going on in their hand. But don't think that I'm the next upcoming apprentice or anything like that. I'm just someone that wants to have good notes in this class, just be on my way. See that displacement? I'm liking this. So if we do close above 25%, what would be our profit objectives? We got pre-market highs that were left. We have even the external range liquidity from previous week's high that we can use to target as well. What kind of stop loss will we be needing? Stop loss can be something like this. Look at that, not even 40 handles. And I usually go for 40 handles too. Or you can even do half. 20 is like low-key cutting it though. But you can do what? Order block. This goes to be our order block entry too. 2.56 RR. Isn't that amazing? Yeah. Don't mind me, guys. I'm just setting up something here. Now notice we have yet to close above 25%, so we're not doing anything. This guy can still, you know what? Let me put this away. Still not doing anything, guys. Just wait, man. Now, how can we interpret price further, right? Well, as you can tell, I haven't been keeping up with my markings. So we had these before. What I'm interested in, we could get rid of the old lows. I'm interested in how we're reacting after 12 a.m. lows, though. You can tell we got in here. Nice trade. I like that. Okay, So how can we update our markings, right? What time is it? 9:21. So we're about to see market open up in 9 minutes. And now let's take a look at how we'll behave moving forward. What has been balanced? What has not been balanced? This is my balanced range theory, or balanced price action theory. I don't know. I haven't come up with a name for it yet. Let's see, what time is it? 7. Okay, we have a classic high, low, high, high, lower, low kind of action. Yeah, it's 7 o'clock. Okay, high, low. Just curious about these lows. 23,112.4. This one's lower. Okay. So we have this classic low, high, low, lower, high, lower, low. So this range from this low to this high has been balanced. What else? Then we'll do the 30s. Wow. It's 2. We also have the macro about to begin too. And then lastly, this guy too. Now before, I used to always think that we gotta refer to these to see if price will want to continue lower. No, 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 no. This is not attached to higher time frame. Interested in seeing this act of support now. And look at that. Still not quite close above 25%. Curious about MQ too. I can see how we behaved here. Can we finally see how we've been reacting here as well? Let me pull up you. And compare you to EMs. And no, we're reacting the same as futures. So in 3 minutes we'll see how we react in the next 3 minutes. Wait, what? Oh, sorry. Let's zoom out for a moment here. Okay, go back here. I'm interested, right? Once we trade the open of this candle, trade above it, that's a change in the state of delivery. Next candle, dip below the open, and look at this expansion. Since we're so close to 9:30, I really would like to see it retrace just a little bit more, right? Um, Down to that order block again and go up higher. But it doesn't need to. It can just continue its expansion up higher, up to pre-market highs, right? But these ideas will only activate after 9:30, and we're obviously not there yet. So this could all just be a big fat wick, to go down lower. We got a minute till the stock market opens up. Again, no news, so I'm gonna start getting my markings updated again because once this thing opens up, you're gonna be dealing with different kinds of ranges here. For example, here, and we've opened. So nice. Okay, what we get for pre-market highs? Let's take a look at that. Look at that reaction off that high here. See that? Is that random? 23,112. Where do we wick? 23,112.1 by 0.1 of a tick. Okay, now we're trading through it. We're looking for pre-market highs to get hit. Okay, we have our alarm settled. And now, yeah, for sure, we have this unlocked. So this is our slingshot. Would have liked for it to dip back down to order block, but it didn't. So we just gotta let it do its thing. Let's see if it'll go back up here. That's such a small. Okay, so we saw pre-markets get hit. Now let's compare. Oops. Let's get put on our 500 here. What kind of reaction are we seeing here? Okay, low to high, low, lower high. See that? Is that SMT again? Yes. So the same deal. We can anchor our A leg to our B leg, and it will only be considered a bearish if we close below 25%. Seeing this energetic open, I don't think we're going to be able to see that. I could be proven wrong too. Dollars opened. I would still like to see it continue to head down lower. Not a small retracement here, going up at o'clock, 8:15. Sorry, this is the futures. So let me go back to the CFD market here. Excuse me. Okay. So we're seeing an unwillingness to close down lower. And what do we have here, folks? Another market maker buy model. High to low, low to high. Balanced price range. Hold on, I just want to really get in here, guys, and investigate this thing. Yeah. Okay, so we closed above the old high. Also, one thing I want you to notice too, look at this. We had a breaker up here. Doesn't mean you can't see it, but there's a breaker up here probably in the seconds chart. Price closed above 25%, right? Or, yeah, closed above 25%. Use that as support. Look at that high, that old high, right? Magically be used as old support. Expand high, expand high. Cool beans, look at that. Why is this anticipated to? Dollar is going down low. So it's going to be a low risk on scenario. So it's going to be an easy way for the market to make higher highs. If it is an excuse to make a higher high, what kind of excuse will be used to make that happen? The reaction of that old low from 12 a.m. We reacted off from this lower low, and US reacting in a higher low manner. We want to take in the breaker one, anchor fibs, wait for it to close above 25%. It did, went back down to 25% level, or it went back down to that breaker that we had lined up here, and then take off. Nice. 20 handles to make 60 handles. Not bad. Now we're reaching up to new higher highs. Okay. But look at this now. Check it out. What's that high here? Open, high, low, close. 6313.2. 6313.0. So we have another high to lower high on that very important pre-market highs up here. This one we still did though. Close above it. How's MNQ reacting to this information? Well, MNQ has still yet to react to this. Where do you think our first percentage fair value gap is? This is. Oops. It's taking place at 9:35. It's 9:40:39. So we'll see this occur in the MNQ chart soon. Look at that institutional order flow entry drill. Higher. How high can we expect this thing to go? Let's use this quadrant here. Push that upwards. And see if that high will be the new higher high of the market. Again, we've never been up here before, so this is new high territory material right here, guys. What in the world? So we'll see if we'll get up here. I'm not gonna lie to you, because it reacted like this, I would have shut down the charts already. Right now, actually, because it would have already met my profit objectives. Um, we're diving into new market higher high territory again. Like, I just don't like being involved in these kinds of environments because you never know how high it's actually gonna go. Like, we can make projections and say it's gonna go up to here, but I don't want to sit down here and wait for that to manifest. If it's not, if I can't get a discount entry because it keeps rallying up, then now there's probably a lot of buyers right now. We're trying to get into like every single buy right now, like order block, buy. But I'm just not that kind of person. Not anymore. So I think I'm just gonna close it up here, guys. A very short stream today. Very short stream. Yeah.